how we are going to handle our retail customer base, because most of the retail customers are fixed salary earners. So if we try to increase the interest rates with the current increased trend of interest, they might not be able to service their loans.
So, in one way, your immediate challenge is how do you reprice your assets? Because your liabilities have repriced, or your deposit base has become higher cost, whereas your loan book is not following suit. Is it fair to think that this is your biggest immediate short-term challenge?
It is actually. As a bank, I think different banks may adopt different strategies, but as a state bank, first we look at this problem from two angles.
Okay.
First is how we are going to handle our retail customer base, because most of the retail customers are fixed salary earners. So if we try to increase the interest rates with the current increased trend of interest, they might not be able to service their loans. So we took a conscious decision not to increase the rates of individual borrowers, because that will lead to more delinquency, because they are in a high interest regime, their purchase power goes down.
Sure.
With other macroeconomic factors like inflation has gone up, maybe disposable income has come down. So with all those factors, their ability to service loans might not be easy. So we kept aside the retail loan book, and we tried and we looked at the other loan books, which is towards the business sector,
Sure.
SME, the corporate sector, where there were two types of loans granted to them. One is the fixed interest rates, and the other one is the variable. The variable, of course, are getting automatically repriced, so we don't have to worry about it. The worry is whether they can service those loans as they used to do it.
At those high rates.
High rates, that's the challenge. But on the fixed rates, of course, we've increased, but not to the level, not on par with the market rates, but at a lesser rate, so that they'll be able to service those loans.